Welcome to the CoinGecko podcast. For today's episode, we have Chris Spadafora, the founder of Badger DAO, on the show. Badger is a decentralized autonomous organization that has a single purpose: to build products and infrastructure necessary to accelerate Bitcoin as collateral across other blockchains. Chris is highly involved in the crypto ecosystem. He organized Crypto After Dark, a crypto COVID-19 charity poker tournament, and is also a partner at Angel Rock, a boutique consulting firm focused on helping large digital asset holders navigate the crypto space. Welcome to the CoinGecko podcast, Chris.
Thanks, Bobby. Thanks for having me here, man.
Yeah, it's great to have you here. Very excited about Badger and would like to hear more about the plans for Badger.
Well, you know me, I love to talk about Badger, so we can talk lots about it.
Yep. So I guess to kick things off, right, Chris? Let's give a simple explanation for our listeners over here. What is Badger, and how do you get the inspiration to start this DAO?
Well, Badger really, like you said, Bobby, the idea with Badger is it's for it to be the #1 spot for all things Bitcoin and DeFi. So when anybody comes into and looking to bring Bitcoin into decentralized finance, regardless what network that is, we want Badger to be their first stop, and we want to be able to help them navigate the entire ecosystem. So today, we have two products, one being our Sett vaults and one being a rebasing Bitcoin called Digg. But the intention here is to have numerous products. All these products are going to be governed by the Badger token, which is a governance token, and they'll be able to make any and all decisions around those products. And then, of course, anything that's associated with the business. So the business is completely community run. And we have about, I'd say about 11,000 community members now that are extremely active across, all of our governance platforms, and everything is in their control. They make all the decisions, and they decide exactly what the organization does. So that's what Badger is about. It's been a pretty crazy 2 months, to say the least. Things have accelerated rather quickly, which for me, further justifies like the demand and need for more products and infrastructure for Bitcoin in open finance, right? I'd argue today there is a limited amount of things that you can do with your Bitcoin. If you bring it over to Ethereum, which is really where most of the Bitcoin in DeFi lives, you can provide liquidity for it on Sushi or Uniswap or Curve, and you can use it as for lending and borrowing on Aave, Compound, or Maker. But like that's really the extent of it, right, Bobby? Like it kind of stops there, and there's going to be so much more to do with it as time progresses. And the goal is, Badger helps build that infrastructure and really is the place that makes people comfortable with Bitcoin on DeFi.
So I guess you have two products right now, right? Sett and Digg. Maybe tell us a little bit more about these products. What do they do?
Yeah, so the Sett vaults were our first product. They're our core product. Today, there's about $1.5 billion worth of Bitcoin, primarily Bitcoin, about 95% Bitcoin that sits in the product. The product's a yield aggregator. So you would deposit different Bitcoin, tokenized Bitcoin LP positions, if that's your Curve position or your Sushi position or things along those lines. And we'll optimize the product will optimize across all the different Lego pieces in DeFi, how to generate more yield for you. So as an example, if you were to deposit the WBTC ETH Sushi Swap LP token in Badger, we will take the Sushi that LP token earns and we'll automatically stake it for X Sushi for you, and then distribute that X Sushi back to you every couple weeks, for example. So there, the user didn't have to pay for gas. They didn't have to go and stake the X Sushi. They didn't have to do those types of things. And for that, the smart contracts take a small fee. And then on top of that, of course, we distribute Badger and Digg, which are two tokens to the user for using our products. And the reason why we feel that's very important is because Badger in particular is a token for governing that said product. So who's better to govern the product than the actual user, So that's the Sett vaults, and Digg is a very interesting product that we've recently launched. And essentially, its goal is to be a synthetic representation of Bitcoin on Ethereum without any centralized custody or custodians. And the way that we're attempting to do that is really a few ways. one, leveraging the power of rebasing mechanics. So the ability for the supply to expand and contract based on, and that's across all wallets, all positions, based on the price of Digg versus the price of Bitcoin. And then, kind of what I would call Badger's secret sauce there is our vaults. So that's what we hope to really differentiate Digg, and really our bet on how to drive stability for the long term is, having automated vault strategies that are focused on ensuring that Digg is at the price of Bitcoin or slightly above the price of Bitcoin. And then, of course, with those vaults, once you deposit Digg in the vault, you're going to get a vault token back, like with all of our vaults. And that vault token represents your total share of however much Digg is in the pool. And that token that you now have is non-rebasing. So you can use that anywhere that ERC20 tokens are accepted. So you can have other DeFi protocols that want to integrate Digg, but they would integrate the vault representation, VDigg. And that composability feature, I feel, is rather unique. And that's what we're pushing for with the product. So it's been an exciting launch. We have about 3,500 holders of Digg today. We're on day 13, I think, of Digg. It was above the price of Bitcoin for about 8 days. And then it went below the price of Bitcoin for about 3 days. And just today, it's at equilibrium with the price of Bitcoin. So it's been, it's been a great learning opportunity for the community as well to just see it respond to how the rebase works and things along those lines. But I'm very optimistic about, the long-term sustainability of Digg.
I'm curious, right? Why do you guys choose to launch Digg? I mean, the rebase token pegged to the price of Bitcoin. Like, in my opinion, rebase tokens are pretty much a type of money game that doesn't really have much use case similar to what we're seeing with Ampleforth right now. I mean, they talk about Ampleforth being a stablecoin with a price target of $1, but no one's really using Ampleforth except to play these games around. So what's kind of the plan for Digg? Are you planning for adoption of Digg? But like, the price can be pretty volatile if we look at Ampleforth, right?
Yeah, most certainly. We never intended for Digg to be a stable coin, right? That wasn't the goal. And that's why we're not trying to peg to a stable asset. We're trying to peg to the price of Bitcoin. And when you think about the use cases for Digg, we think about Digg in the sense of how do you best have a representation of Bitcoin in other networks to which people would want to use that Bitcoin for financial applications and services without having to rely on centralized parties to custody that. So it's different when you're trying to be a stable coin and then all of a sudden like stable coins are meant to be used for things. Yep. In this instance, it's more around participating in other networks in open finance without the need to actually have or custody that Bitcoin. And we think the rebasing mechanics that are inherently built into Digg, which are very similar to that of Ample, with stability mechanisms in place, can have long-term sustainability, right? So for us, like as an example, the Digg vault, which has about 70% of the circulated supply of Digg in it, in the next 2 or 3 weeks, we're going to be converting it into a stability vault, to which, and these are, strategies that we've been developing and working on and testing. So they're not 100% confirmed, but nonetheless, like imagine, you have this vault that's earning Digg rewards and that also rebases within the vault. If you were to, at certain parameters, take the Digg that's being earned, take a percentage of the positive rebase, sell it for WBTC, and now have that WBTC in a reserve to which when the price hits certain parameters and it's looking to be in a negative state, you then automatically activate that WBTC to buy Digg to keep it where it needs to be. These are all happening across non-custodial smart contracts, right? It's not a team sitting there and like pressing buy, right? This is a very different situation. But we tend to think that with mechanisms like that, you can most certainly have a better price peg compared to some of the other rebasing assets we've seen before.
Yeah, I think what you mentioned about having WBTC sounds, I mean, this is new information to me, but sounds interesting. It almost reminds me a little bit of fractional algorithmic stablecoins like Frax, where Like instead of it being there's not instead of there having no collateral at all, there will be some collateral in Frank's case, which is USDC. In your case, for Digg, there will be some WBTC.
But
Yeah.
then we're also actively putting it to work. I think that's a little bit of the different piece. Is like that's a reserve, not to back it, but more to use when necessary, right? Like because that's how rebasing mechanics work. It's all about buying and selling, right? So when the price is below peg, the goal is to induce buying activity. With the mechanics the way they are today, it doesn't do that, right? On the sell side, I think it works phenomenally, right? You have 10 Digg in your wallet. The rebase is positive. It goes up to 11 Digg. I'm going to take that 1 Digg, I'm going to sell it, and I'm going to take that profit. Like it works great. But on the buy side, it contracts. Everyone gets scared, sells, and then it just goes into this spiral, right? So if you now have a mechanic to which people are comfortable putting the Digg or whatever this asset is into a vault that automatically takes the actions that further enhances the mechanics that are built already into that rebasing token, I think that in itself is really going to help with the peg long term.
Is this already live, like the WBTC buying and selling mechanism, or that's sort of coming?
No, it's not live yet. We have about 3 different strategists that are working on the strategy as we speak, with the intention of running through the internal security processes and things along those lines before we bring it to the market. But the goal is to bring that to the market in February, and ideally convert the existing Digg vault into that, right? So that users would be earning interest on their Digg. They'd be able to use that Digg in whatever centralized or decentralized protocols or projects want to accept it, because it doesn't rebase. And then within that, they have the right to whatever the BTC reserve is, plus the Digg that they, of course, deposited.
And you mentioned that the reason you guys launched Digg was because you wanted a non-custodial way of having a Bitcoin representation of Ethereum. But what do you think is the problem with tokenized Bitcoin forms like WBTC, RAN BTC, SBTC, TBTC as well, for example? I mean, some of them are more centralized like WBTC, but like RAN and SBTC and TBTC, they're pretty decentralized, right? I would say.
Yeah, most certainly. And it's not about them having a problem. It's just about pushing the space forward, right? We're so young. There's just so many things to do. But I think as well, like different types of investors or different types of holders will have a different appetite for certain types of tokenized Bitcoin or tokenized anything, really. You know, we can see that today in the lending and borrowing market, right? We have folks that are more comfortable using Compound and Aave, and then other folks that are more comfortable using BlockFi, right? And it's a very different kind of appetite. You can earn more, and you can, you know, assume more smart contract risk, and, you know, more technical, you know, you need to have a little more technical expertise, or you can go to a BlockFi and, you know, have it be more of a Coinbase type experience, right? So I think you're going to have different users with different appetites, and there's going to be different risk and reward profiles for the users that want to use different ones.
Yeah, I think you got a point there. I mean, if you don't launch a rebased Bitcoin, like someone else will launch a rebased Bitcoin. I'm hearing a lot of ideas, rebased version of gold and dollar and all kind of things. So yeah, it's just a matter of time before someone launches it. But I mean, looking at the specifics, right? Comparing Digg and Ampleforth, yeah, the main difference is that Ampleforth has a price target of $1, Digg has a price target of 1 BTC. Are there any other major differences between this Digg and Ampleforth?
Yeah, so at a code level, we built Digg off of Ampleforth's code intentionally, right? And same way we built our vaults off of Yearn's V1 code base. We believe in this idea of open source, and we want people to build on top of us and things along those lines. But to accelerate and go to market quickly and have a level of confidence and trust in the contracts that you're bringing to market, to which you can see, Bobby, you know firsthand, like how fast capital can go into new contracts. Building them from scratch is, like, in my mind, it's almost unbelievably irresponsible. You know, not saying that you shouldn't build code from scratch. What I'm saying is, if your goal is to accelerate and capture a user base and bring something to market quickly, while at the same time trying to adhere to a certain level of security posture, building off of and innovating the foundational code base that's battle tested and has had multiple audits and things along those lines, like that's a better way to go. And we built our code base off of Ample because we believe, one, in the rebasing mechanics, but two, they're the most battle tested rebasing code base in the market. They've had like 600 or 700 rebases already. I think it's like in the sixes, 620 or something along those lines. But for us, what's different about Digg, of course, it's pegged to a volatile asset, which I think we're one of the first to attempt this. Everyone else has tried to peg to something that doesn't change in price. But it's really about the vaults. That's what's the big differentiator for us. It's, what do you do? We obviously launched it differently. Like Ample, raised capital, and they have different investors and things along those lines. Our Digg launch was a completely fair launch. The token was distributed to people, a small percentage of the token was distributed to people that used the Badger app over the first 2 months. And we did a variety of different things to siphon out people that were farm and dumpers versus long-term stakers and protocol supporters. And we rewarded them more, and so forth and so on. But from day one with Digg, everyone's on the same playing field. Yep. It's not like, a certain group got it at a certain price. Everyone got Digg at the same time, at the same price, and we're all in the same space. So that's somewhat of a differentiator. Of course, it's community owned, and the community makes all the parameter changes, and it's governed by the DAO. But it really comes down to the vaults. Yeah. Because the vaults are what are going to introduce some of these new mechanisms for composability and stability that allows for Digg to be implemented in other protocols without the need to adhere to whatever the rebasing mechanics are. Mm-hmm. And then as well, it will help us, drive a better peg because of some of these automated strategies that we're going to build at a smart contract level.
Yeah, I like the fact that Digg was a fair launch, and I remember receiving some Digg as well because I kind of staked my Badger in the early days as well. So that was a good thing. And Badger.
So the real question, Bobby, is what did you do with that Digg?
I kept it for a few days. Went up through I knew it was going to be going through a few positive rebases, but I knew it was going to end. So I didn't know when it will end. But I said okay, after the second or I think the third day, I just okay, took profit on it and let's wait and see, right? Because it will eventually go down. So, and then, it went on for 13 days, but I think when I sold it was 70,000 or so at one point. So I thought it was a good price to take profit on an airdrop token. So that's what I did.
Yeah. So just to give you a perspective, so today one B Digg, so one Digg that's one B Digg that represents your share in the vault is worth 1.56 Digg. So if you took that Digg that you earned in the airdrop and you staked it in the vault and waited these 2 weeks, at the current price, that one Digg is worth about 50 or 60,000, right? But the key thing with Digg is that, and with any rebasing tokens like ours, is that it's a percentage ownership in the market cap, essentially, right? Because it's non-dilutive. So that's where, and there's a lot of education. Like, some people think, with what happened with Ampleforth over the last 6 months, like everyone knows about rebasing. We're constantly inundated with questions about how all this stuff works because it's so confusing for many people.
Yeah, I think the vault part is something new and a lot of people don't really understand. Essentially, you take the Digg, you put into the vault, which sort of increases or decreases based on the supply, right? So that's essentially what it is.
Yeah, I think that the idea there is with the vault, you deposit in the vault and that's it. You don't really have to worry about anything. Anything as it relates to rebasing or earning interest or anything, stability, that's all happening in the vault. Until you're ready to withdraw, you don't have to do anything because it's 100% auto compounding. So any of those rewards are going right back into your vault position. And when you want to withdraw, that's when you would see any gains, if any.
And the vault has Badger reward as well, right? So that's why it achieved this 100% APY, right?
Well, in the Digg only vault, it's just Digg. Okay. And that's just a product of the price of Digg and how much emissions the community voted to delegate to that vault in particular. But once again, a lot of that stuff, Bobby, it's unsustainable. right? Like it's great for bootstrapping. Don't get me wrong. It's phenomenal for bootstrapping, for, distributing your token to a community with people that have a say and vested interest and, a passion for what you're doing and things along those lines. But you can't do that forever, right? Like it's super unsustainable. So that's where, with the strategy that I was talking about earlier, about the WBTC reserve and things along those lines, there'd be an opportunity for that vault to take a percentage of any of those trades that are happening. And that would be a great revenue generating product for the DAO as well.
And talking about fair launches, right? Like, how was Badger a fair launch? I knew tokens were distributed to people who were active in DeFi, yield farming, governance proposals, Gitcoin, and so on. But was everything distributed that way, or the team, or do you guys raise some money from investors? What was the launch for Badger?
Yeah, it was a completely fair launch. I believe tremendously in the future of open collectives, open communities, building the biggest permissionless products in the world, and having the most valuable companies in the world. I believe all digital business is going to be like this. But essentially what we did, me and a handful of friends, I've been in the crypto space about 8 years myself, me and a handful of friends that have been around a bit, we decided to seed everything ourselves. So we capitalized, we built the brand, we, built the products, we paid for the audits, we built, spent the time building the community and so forth. And so we didn't raise $1. And then we distributed a percentage of the token supply to anyone that took certain actions in DeFi. That was a big step for us. And it ended up being a very rewarding decision, because the way that it's played out, and it was the vision, but you think about things in your head, but if they actually end up becoming a reality, is a totally different story. But the vision was like, hey, if we're going to build this open community that truly has ownership and has say, and then it's actually wants to help make decisions, you better get a group of people that share in the same value and belief system. Because if they don't, there's not going to be that cohesiveness and that tied mission towards being able to actually push us in the right direction and make it something that manages billions of dollars and things along those lines. So, really it was about what are those three core values that we wanted to attract. One was people that believed in supporting public goods in the future of building Web3, right? So we airdropped our token to anyone that participated in Gitcoin grants since inception. Obviously, especially since our core product was a tokenized Bitcoin yield aggregator, anyone that was already using tokenized Bitcoin in DeFi was a super target for us. Target in the sense of making them a community member, not target in the sense of, acquiring them as a customer. But like, these are the people that understand the value of Bitcoin and other networks. They're comfortable using decentralized finance. They've already participated in a variety of different applications and things along those lines. So we looked at those that provided liquidity on Uniswap and Sushi and Balancer and Curve and, Maker and Compound and Aave and all the key protocols. And then finally, of course, being able to attract a community that was interested in and already participated in decentralized governance was massive. Mm-hmm. So those that participated in governance with Wi-Fi and Harvest and Sushi and folks like that, we included them. So there's about 32,000 addresses. Interesting fact, there was 2.1 million Badger, which today would be $100 million. Only 800,000 Badger were claimed. So there's still 1.3 million that were unclaimed that now are in the hands of the DAO for them to decide what they like to do with. But that was a big bootstrapping activity for ourselves that really helped us get off the ground and help make Badger, a community of people that actually cared and that wanted to invest the time, effort, and resources to build something together.
Mm-hmm. Let's talk about Sett, right? I mean, Sett is a yield aggregator similar to YEarn, but yours would be more focused on Bitcoin. Walk us through some of the APY that users can get on the yield farms, yield aggregation on aggregator on Sett. What farms are the highest yielding? Which ones are high yielding but low risk? Yeah.
So right now there's $1.5 billion inside of the Sett vaults. That's spread relatively evenly across a variety of different vaults. I think today we have, I think 11 different vaults, if you include the new Digg ones that we launched a few weeks ago. The biggest vault is the WBTC ETH Sushi LP vault. That's our largest vault. And then subsequently, the 4 Curve vaults, the REM-BTC, SBTC, WBTC, and TBTC vaults are all about 175 to 200 million in each vault. And the APY it depends, but for the most part, those 5 vaults that I talked about, they're anywhere between 50 and 90% APY. Now that APY for the most part comes from the Badger and Digg that those vaults are earning, right? Call a spade. The active strategies, because these are all active strategies. So for the curve vaults, we take the curve that you earn in your LP position, we sell it for the underlying token, if it's TBTC, SBTC, so forth and so on, and then reinvest that back into your LP position so you're earning more rewards. That's the underlying strategy that happens. That's only a few percent, right? You're only earning a couple percent interest there. So really moving forward, it's a massive focus for us on how do we attract amazing strategists that want to develop Bitcoin focused vaults and strategies that have higher APY organic interest versus having to rely on the ability to distribute Badger and Digg to make up for some of those APYs. So we've had quite a few strategists kind of work with us, and we have a unique incentivization structure. So unlike some of the other folks in the market, we have a dedicated pool that we call our developer mining pool, which almost is the same amount that we allocated to our liquidity mining initiative. And in the developer mining initiative, there's about 3 million Badger tokens in there. So about $150 million worth of capital that hasn't been used yet. And the way that folks can earn from that pool, which has, community determined emissions every month, is by bringing revenue to the DAO. So that could be creating vault strategies that bring revenue. That could also be introducing brand new products. We've been very open with the products that we're working on. We're working on 4 new products that intend to launch in February and March. One of them is a Bitcoin bridge, which with a REN VM integration. So the ability to go from native Bitcoin right into the vaults in our app. Also, we've been working with the Zapper team around creating quick deposits and withdrawals, or ZAPs, from any asset, single asset. So you can go from ETH, USDC, any tokenized Bitcoin right into the vault positions with one click. And then we also have been working hard, and this is a huge thing for long-term sustainability. How do you bring real utility? How do you bring additional utility, to the users and depositors in our vault product? And we're introducing the ability to borrow against your vault position in Badger.
Yep.
So we've been working with Uma and Sushi on one of the products. We call those products claws. And those are stable coins that you would mint using your vault position as collateral. And then we've been working with another group, and we'll share who they are soon, but they're in the DeFi space as well, on an interest-bearing Bitcoin we call WBTC. Now the name might change because I know Binance has a similar name, but nonetheless, really what that is your ability to use your Curve BTC Badger vault position to mint this interest-bearing Bitcoin, and this interest-bearing Bitcoin is backed by an index of all of our Curve BTC vault positions. And then with both of those, you'd be able to LP them on Sushi, take those LP tokens. We'll have subsequent vaults in our product so that you can earn additional interest, or you can then take that token, swap it for WBTC or USDC, and then continue your journey in DeFi. No longer will you be stuck providing liquidity in one place and not being able to do anything else with it moving forward.
Yeah, I completely agree. I like the idea that you are looking at using LP tokens as collateral, because one of the big issues right now is once you put for example, I'm providing liquidity for each WBTC on 1inch, because there's a 1inch liquidity mining program there. The problem with that is once I provide liquidity on 1inch, I can't do anything with my ETH or my WBTC. I can't draw out collateral. I can't go to Cream. I can't go to Compound Aave and draw out like, I don't know, $500 loan if I want to. So what I think you do, your idea of having liquidity on ETH, WBTC, or all these LP pools, even for your wards and all, I think those are brilliant. And I expect to see huge growth in LP collateralized lending this year. So definitely the right direction, I would say.
I agree too. Obviously, I think, I think we'll be able to see billions of dollars. If you can earn interest, you can deposit in a vault to earn native interest, and then you can use that to unlock your Bitcoin or your stable coin to then continue using in DeFi. Man, like that's like it puts everything into perspective. It just shows how all the products that exist today, they seem at a topical top of the stack type layer, where in actuality we're so early that those are all like the bottom layer of the stack. And like once you start unlocking all these additions, it's like a staircase. The more you're able to unlock that value, the more these protocols become the primitive layer of DeFi. And, that's our goal. We want to be like the primitive layer of Bitcoin in open finance. And I think this could be a good step.
Yeah, I mean, like I think for your interest-bearing Bitcoin, I think that's a good idea. Alpha Finance has something similar. They call it IB, ETH, interest-bearing ETH. And I think you get about like 10% in the IB ETH ward if you put for your ETH around 10% or so. I mean, like doing something for your Bitcoin would be interesting as well. I was talking to a friend yesterday, actually Michael of Box Mining, and he mentioned that he's putting his tokenized Bitcoin onto Badger Ward and he draw out 90% plus APY. I didn't know there was that high of an APY on Badger until I spoke to Michael yesterday. And that was interesting, right? Because now I could kind of grow my Bitcoin at 100, almost close to 100% APY just by putting into this board. Like all these tokenized Bitcoin forms shouldn't be just sitting doing nothing in the wallet, right? Should be earning some yield on it.
Yeah, and Mike probably told you that because Mike started a Clubhouse room and I joined, and it was like an hour session with everybody about Badger, and at the end he was like, this is like a super informative. So it sounds like Mike's now just going to be talking about Badger with his friends, which is great. But like Clubhouse is wonderful for that purpose. Actually, I've been, this is like literally the first week that I've started playing around with it, and I've had nothing but a great experience talking to really cool people. But
I was on the Clubhouse yesterday actually, but I was there for the first half an hour or so, and then I kind of dropped off. Didn't realize.
Nice. Nice, yeah. And no, but Bobby, that's the goal, right? Like we want to be this like the black hole liquidity pool for Bitcoin in DeFi, right? Like that doesn't exist. There's 1% of Bitcoin today in DeFi, which makes up, I think, what's that number? Like 33.7 billion in that range, right? Just to throw a number out there. Less, probably 3.5 billion. We've acquired 50% of that. Right, 1.5 billion is in Badger today. So for us to maintain that, it's really, it's ours to lose, and it's ours to innovate, and it's ours to kind of build this deeper liquidity pool. And we just think it's just beginning. Like this is literally just a start. We're obviously very excited about the ability for 10, 20, 30% of Bitcoin in the market to be living on other chains and to be, taking advantage of some of the opportunities with decentralized and open finance and lending and borrowing and earning yield and things along those lines.
Talking about Bitcoin on the other chains, like do you guys have any plans to launch tokenized Bitcoin on other layer one platforms like Polkadot, Binance Smart Chain, Serum, and so on? And are you guys planning to also have Badger DAO on these other platforms?
Honestly, Bobby, we're agnostic. To be honest, like we're obviously big fans of Ethereum, but Badger's, is a community-owned initiative. So for other chains to want to integrate Badger and some of Badger's products, it's a product of those chains and the people that represent those products and chains to show their willingness to want to have Badger collaborate with them or whatever it may be within our community. And if the community thinks it makes sense, then that's the direction that the DAO will go. in the beginning of the call today, I've said this a few times, and I don't mean to say it to kind of be a dick because it's not my goal. I don't consider myself the founder of Badger, right? We help seed it, we help get it going, but I'm just a community member like everybody else. And yeah, I shepherd a lot of the conversations and the decisions, not the decisions, but more the messaging and how things kind of come to light. And I'm obviously helping lead the operations of the core team. But, it is a community owned and run project. And if any and all chains are interested in how they can further drive Bitcoin on their chains, come chat with Badger. Like, we're super open to it, right? Ethereum has been our total focus, but in the early days, but that was never the complete vision. The vision was any and all chains, and open finance or decentralized finance is not Ethereum only.
Yeah, I agree. I think at this point in time, like Ethereum still has most of the mind share, most of the developers, most of the users, they're all on Ethereum. I think for the other layer one platforms, I think it's kind of a wait and see game to see if they will pick up traction and users. But there's not that much incentive to launch on the other layer one platforms for the time being. But if things pick up in the next 6 months on one of the other chains, then yeah, by all means, like it makes sense to launch on these platforms.
Yeah, most certainly. Totally.
And look, let's talk about partnerships, right? You guys have partnered with quite a lot of people in the space. What were some of the key partnerships and how did it really benefit Badger?
Well, the approach that we're like, we want to work with everybody, right? Like, our goal is to be the umbrella for all the best builders and protocols and projects and development shops and individuals and anything really to come together and build products and infrastructure necessary to accelerate Bitcoin and decentralized finance. Like, that's our goal. And we have the right incentives for it, I believe. I believe. But nonetheless, like when we talk about some of the projects that I outlined already, right? We talked about Ren. We talked about Zapper. We talked about Uma and Sushi. I didn't talk about the fourth one for the interest-bearing Bitcoin, but they are an existing, DeFi protocol and project. These folks have built the underlying smart contracts based on their existing protocols. We're going to run them rigorously through our internal security processes, build a front end for them, integrate our vault tokens with them. And as it relates to what they then benefit from, obviously, they benefit from any of the liquidity that's in our system, but they're going to be earning from that developer mining pool, Bobby.
Oh,
like that pool,
okay.
they're gonna be earning from that pool, and that pool gives you Badger, and Badger's used to govern these products. So now you can build products, put it in an app with a lot of the mind share on that specific sub-segment of the market. And when you do that, you then have the ability to govern said product moving forward. And any of these products that we're building as well, or they're building with us, they also share in 50% of the fees. So there's going to be a revenue share for all of these products. They're also going to be earning from the Badger development pool. And that's, what we would want to see continue to happen. So it would be amazing for us in 6-9 months, there's 10, 12, 13 products that live within our app and ecosystem, some that we developed from the ground up, but most that are partner driven with our help and collaboration. And these same partners then are participants in the DAO, making decisions around these products that they brought to market with us, and also just community members just like me and everybody else. And that's where, a lot of the partnership interest has started from. And I'd also say, we've always been for supporting other protocols. So a good example of that is sushi. A lot of folks farm sushi and then they sell the sushi and whatever. With our vaults, we stake that sushi that the LPs earn for X sushi, further supporting the protocol, and then distribute X sushi to the users. And obviously, it requires a little bit of work for those users to take X sushi and turn it into sushi. So that further enhances the chance of them not just dumping it, but instead like joining the sushi community, getting comfortable, participating a bit, sharing in the protocol fees, things along those lines. So we've always tend to be a type of protocol that wants to support others rather than, being more parasitic in nature.
Cool stuff, man. All right. So I guess for the final question, right, if someone's really interested to learn more about Badger Finance and to follow developments on this DAO, where's the best place that they can catch up on all the latest information?
100% our Discord. Our Discord is very active. We have about 11,000 people in there today. And yeah, I'm in there every day. The teams, everyone's in there. And, you know, anybody wants to talk to anybody at any time, we're always available. And then we have a great, amazing support team that's super knowledgeable. Like, you know, they're not a support team, they're community members. And, you know, they lead support. But they came into it just like everyone else. Like today, Bobby, it's wild, but like we have about 40 different contributors that are part of the team. You know, and a few months ago, it was just a few people, you know,
Amazing.
and these contributors span so many different roles, from support to front end development, back end development, Solidity, you know, Solidity focused developers, marketing, communications, like, you know, social media, like just so many different things. So nonetheless, to answer your question, because as you can tell, I like to talk. Anybody that wants to get involved with Badger in any regard, come to our Discord. You can find the link in our Twitter profile. Our Twitter is Badger DAO. Just type in Badger, it'll probably pop up. And from there, you can join the Discord and come say hello.
All right, cool. Thank you very much, Chris, for the amazing insights that you gave on Badger today. It's great having you on the show.
It was great being here, Bobby. You guys have been great supporters from the beginning, and I really appreciate everything you guys are doing for the space.
Thank you.